Hey guys, hope you and your families are doing well. Multiple time frame analysis is a useful tool that I use when I'm analyzing breakout setups. Now, an area of the market that I'm seeing a re-emergence of strength in is commodity material related stocks. And MP Materials was a VCP that I traded last year, so I thought now is a useful time to be reviewing that trade. I'm going to show you some of the things that I'm looking at on the daily chart and also on the 1 hour chart as well. You can see this really nice VCP that was built last year, building the contractions, high lows, tightening in price. So we'll look at it on the daily chart, which is on the left, and then also on the 1 hour chart, which is on the right. Now, MarketSmith are the sponsor of this video, and I'll flash up 3 charts of lithium related stocks that look fairly interesting. The first one is SQM, potentially a very big weekly base, ticking some of the CAN-SLIM criteria. The next one is ALB, similar, ticking some of the CAN-SLIM criteria, potentially a big base. And then one that is getting my attention is ticker PLL. This is a US lithium stock, potentially they're a very large base, and what I'll be looking for in these stocks and other commodity material lithium related stocks is a similar setup to MP. So let's start talking about MP, and we're going to start our analysis on the daily chart, and then we'll be jumping across to the 1 hour chart and looking specifically at the last week and a half or so. So with MP here, it's potentially building a very large base. So see the causality point here, potentially building a very large base, which can mean in terms of the law of cause and effect, there's a large cause built here, so there may be a large effect. Not always, but sometimes there is, and then I want to try to the best of my ability to capture that intermediate term trend, which I never have any idea how big that intermediate term trend is going to be. So we're looking at this here in the context of potentially a very large base, okay, like this. Now over here, this is where it starts building this VCP nature and starts to tighten up. So let's start talking about that. And there's a couple of things just from a volume perspective to be training your eyes for. Ideally, when you see the largest volume in a base building, ideally you want to see it near the swing lows, because it is the large operators that create the swing lows. It's not retail trade, it's not you and me, it is large operators that create the swing lows when they see the 2 things they require above everything else, which is liquidity and perceived value. That is what they are looking for. So the large volume is an indication that large operators are active. So are they selling off the top? So are you seeing a lot of volume coming through when the stock is rallying, or are you actually seeing it towards the bottom of the swing lows? It doesn't have to be the exact bar, but ideally you want to see the larger volume on the swing lows and then preceding reversal candlesticks as well. So you see here, you have this nice shakeout demand tail. You have a gap down here, but then you have a demand tail, no consistency of supply, and then price starts rallying. Something else to be training your eye for is what is going on around around the earnings, especially if it's a more liquid stock, ticking some of the CAN-SLIM criteria preferably as well. Ideally, you'd like to see positive reactions around the earnings as well. Why? Because large operators are invariably active around the earnings. So we can see here a couple of times the earnings come through, decent rally coming through here, a couple of days pop, and then we pull back down. Then you can start seeing the stock starts putting in these higher lows. But what do you notice? Yes, there's higher lows coming in, but what do you notice about some of the reversal candlesticks? You see, like in this bar here, see the strength of that reversal. So something else that is very good to see is on the reversal of the swing lows in a developing VCP base. So on those contractions on the reversal, ideally you want to see what I call bullish synchronicity. So that is these widespread candlesticks. So open is near the low of the bar, close near the high of the bar, is wide on a relative basis, and the volume is confirming the move as well. There's really good to see, and you can see it to a lesser extent in here as well. So ideally with a VCP, you'd like to see if there's a big base like this and then it starts tightening up, that could look very interesting, and often it looks pretty good on the weekly chart too, especially if it's clustering around one or more key moving averages, especially if they're the longer term ones, such as you see here. You've actually got the 10, the 21, the 50, and also the 100 SMA, and then the 200 is just here as well. But it's this VCP nature here where it starts tightening up like this. Then what I want to do is start dialing in. So when I start to see these contractions in price, then I want to start dialing into the 1 hour chart, and there are certain things that I'm looking for, and this is hopefully where this will start making sense to you. So let's now just pull across the daily chart, and let's go down to the 1 hour chart. So what we can see here, we've got our 1 contraction, 2 contraction, 3 contraction, then extreme tightness coming through in here. And if we start then dialing in, you can see this large volume coming through on the lows. Really good to see. But when we start coming through over here, and now we're looking at the last, that's maybe 3 weeks or so, just under, in terms of this pivot actually setting, what chart pattern do you now see? So remember, on the daily chart there, and you would have seen it on the weekly chart, got a really large base. On the daily chart, we're building that VCP. Now when we go down to the 1 hour chart as well, and we're actually just looking at this region in here, okay, this region here on the daily chart, what chart pattern do you see? I see a VCP. See how you're building the high lows? One contraction, two contraction, and then the third and final contraction getting really nice and tight. If we were to zoom in even more like this, now what chart pattern do you see? Such is the fractal nature of the market, now you see a cup and handle with a low handle, so a lower pivot forming. Now in the days leading up until where I actually want to be targeting the stock, there's very specific things that I'm looking for. First and foremost, I would like to see evidence that there is demand moving into the stock and there is a lack of supply thereafter. So we can see over here, this is called bullish synchronicity. An important concept to also remember is large operators are most active in the first hour and also the last hour of the session. In between that, they're having lunch meetings, whatever, right? I'm joking around a little bit, but they are most active first hour, last hour, and especially in the first hour. So what I pay attention to in particular is first one hour candlesticks. Certain things that I want to see, that's usually where you can see some games being played, and also I want to see evidence that there is demand there. So I could see gap down reversal bars, I could see shakeout demand tails, but better yet, if I see what I call bullish synchronicity. So this here is the definition of bullish synchronicity. See how it's a widespread relative candlestick. Look at the volume confirming the move as well. Price pulls back in, we put in this higher low, and then this first 1 hour candlestick here turns out to be the swing low. So this is then thinking in a Bayesian way of thinking. As new information becomes available, you constantly update your decision-making process. So on the swing low, you're seeing further evidence that there is absorption of supply and large operators moving in. Why? Because this is actually a marginal gap down. So the prior close is here, so it gaps down to here. There's this nice shakeout demand tail, good volume coming through, reversal, and then look how there's no consistency of supply. So this is a little bit of a turning going on. There's always a balance and an imbalance between supply and demand. So you see how suddenly the stock starts acting differently in here. Look how price, it can't go down anymore. This gap down reversal with a shakeout demand tail turns out to be the swing low. Look how the volume dries up. See how the stock is now starting to act differently to as it was here. So this to my mind, and as we play this forward for the next couple of sessions, this to my mind is my interpretation of the Livermore point, the line of least resistance. The stock is getting ready. Now what do we see on the next session? Well, we see a bullish synchronicity candlestick. First 1 hour bar, some decent volume coming through, opens on the low, pushes up, a little bit of volatility, but then a nice strong reversal bar. And then what I like to see, when I break down, I look for what I call a trigger bar. So a trigger bar on the daily time frame. Then when I drill it down onto the 1 hour time frame, in essence, I'm looking for a mini Darvis box. So you see here how you get this mini Darvis box forming here, which in essence is just a rectangle, right? So you see how price just goes sideways here. Now the market is always in a state of either imbalance or balance. So what I'm basically looking for is when that trigger bar forms, I'm just looking for there to be an agreement, a kind of balance between supply and demand. Then what I'm trying to do is trade the imbalance. So I'm looking as these base develop. So as you get the VCP and you get these contractions, the market, the stock is moving through a state of being imbalanced in either favor of demand or supply, and then an area of balance as well. So as that kind of trigger bar forms, I'm looking for that area of kind of agreement in price, if that is making sense to you. So that area of balance, and I'm looking at it in a visual context, right? So I'm looking at the characteristics of the candlesticks. I'm looking at the volume. I'd like to see low relative volume. So you can see on this trigger bar down here, low relative volume. You can use the moving averages as a useful reference point as well. So you're looking for flags, VCPs, cup and handles, Darvis boxes, whatever it may be. But ideally with trigger bars, they should be setting up around one or more key moving averages. Invariably, that's going to be the 10 EMA, potentially the 10 EMA. In a larger base, you may also have, say, the 50 SMA there, or even the 100 SMA may be very close by. But when you then go down onto the 1 hour chart, I like to see price consolidating very close to the 10 EMA, which is the black line, 21 EMA, which is the blue line, and also the 50 SMA, which is a purple line. So that there, in terms of the deliberate practice, deliberate nature of doing things and studying things, that there is a useful reference point. Then I'm looking for this nice Darvis box action, just nice sideways movement. There isn't too much volume coming through. First 1 hour candlestick can often be a little gap down reversal bar, shakeout demand tail, something like that. So you see the prior closes here, but price actually gaps down here on the open. So it gaps down, okay, shaking out some of the weak hands further still, and then see nice recovery here. Then you get demand tail, you get a demand tail, and then see how it's just tight to close out the session. Nice reference point at the moving averages, looking constructive on the daily chart as well. So this is then creating that lower pivot. So you then have a confluence here of the larger base on the weekly chart, larger base on the daily chart, building the higher lows. You then start drilling it down onto the 1 hour chart. Okay, you then start seeing a VCP in here, you then zoom it in even more, you start seeing cup and handle, you start zooming it in even more, you then see a Darvis box. So you're just trying to line up as many things as you possibly can. Now ideally, I won't go too much into the kind of the controlling the risk and the risk mitigation side, so free rolling and then optimizing profits in this video. But ideally, okay, you can then go in with a tight stop, because your expectation is price should break out through this level. Ideally, I want to see this bar here. My expectation now is there's this nice balancing act. It's lining up. There isn't much supply coming to the market. We can visually see that. I like the chart patterns that are setting up across multiple time frames. My expectation is price should blast through this low pivot level, this line of least resistance of 44.36, and I should see a candlestick like this. Now ideally I want to then try and free roll into that, so as soon as prudently possible I want to take the risk out of the trade. This is a Sun Tzu Art of War principle. Position yourself beyond the possibility of defeat. I would add as soon as prudently possible. So if my risk on the trade here, okay, because my expectation is this should just go. If my risk on the trade here is around 2.5%, just to use round numbers, then actually I could be looking to free roll, so selling 1/3 of my position at 2 times my initial stop. I could be looking to free roll at around about 5-ish%. Now I may also then, to really confuse some people, you can then also look left. So if you're then targeting a lower pivot in the base, you could look left at where is the overhead resistance, where might price be stalling out. Well, we've got this kind of level here around $46, so something like this. If we put this in here, so we can then be reverse engineering where are we looking to free roll, and we've got some levels here potentially $45.98 just underneath $36. We've got this higher level as well of $47.30. so then you can have kind of variations of your strategy in terms of if your initial stop is going here, if price then reaches 45.98, you need to bump up your stop loss, so then you're still maintaining selling 1/3 at then 2 times where your stop is. So then you can have variations of your strategy. But if you're targeting these low pivots, it's good to be looking left on the chart and saying, okay, price may stall out here, reverse engineering the trade management aspects of things, of trying to remove all of the risk from the trade. So it may not make sense, there may not be the opportunity to actually be free rolling into this fair side, because the percentage gain isn't large enough. It's only around about 3.5%, and you may not be able to push the stop loss up. So then you may have to go with the higher level, so something like that in there. So around about two times the stop, maybe just underneath $47, which is then underneath this local high over here. That's how you can be thinking about the trade management side and free rolling trade. So on this bar here, this is my expectation. If my timing is spot on, if the stock is ripe, if that line of least resistance is formed and the buyers are going to show up, okay, this bar here, this is the entry through the pivot, and then I've also free rolled it by selling 1/3 at 2 times the stop loss. So now I have no risk on the trade. So within the first half an hour, this half an hour candlestick, within the first half an hour candle, because it's an hourly chart, but because of how many bars there are in the session, probably just confuse people. In the first 1 hour candlestick of the session, right, I've been able to free roll. So I've now got no risk on the remaining two-thirds of the position. Now who knows? Maybe this stock is going to blast out of this really powerful base and go on an absolute tear. Maybe it's just going to reverse in the next hour or so, and I'm stopped out break even. But my first port of call, as soon as that position is filled and my stop is in, can I free roll the trade? Can I mitigate the risk? Position myself beyond the possibility of defeat. I do not want to lose any money. Once I've then done that, then I can move into the optimizing profits phase of the trade. So I will wrap it up there, guys. Hopefully that video was useful for you in terms of thinking about VCPs in terms of larger basis, like some of those lithium stocks we're currently seeing. Things I'll be looking for on both the weekly chart, the daily chart, but also then going kind of myopic onto the 1 hour chart as well. And then thinking about planning out the trades, initial stop losses, thinking about free rolling levels, looking left on the chart for local highs. Can I free roll into those if I'm targeting lower pivots in the base? So hopefully you guys enjoyed that video, and I will see you in the next one.